If you know the enemy and know yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, for every victory gained you will also suffer a defeat. If you know neither the enemy nor yourself, you will succumb in every battle. Sun Tzu's Art of War is an iconic guide to strategy and warfare, but the lessons have universally applied to leadership, business, and personal governance for people across cultures for millennia. It's time we apply that thinking to the silver market. You've heard the bull case for a continuation of the silver rally, and today we're presenting the bear case. If you appreciate clear-headed analysis, insights, and stories about precious metals you won't find anywhere else, please subscribe. This minor gesture of support makes all the difference in allowing us to continue producing these videos. Thank you. Silver's recent rally is impressive, but it's not unprecedented, nor irrational. Some market surges are driven purely by speculation and end with a sudden crash. Silver's rise, however, has largely mirrored gold's, with both metals moving in step through recent price hikes and pullbacks. But while these markets often move together, they aren't the same. Gold is primarily a monetary asset. Most of it ends up in jewelry or sits in vaults as a store of wealth. Silver, on the other hand, is an industrial metal consumed in the hundreds of millions of ounces each year. And one of silver's most volatile demand segments isn't industrial at all. It's investment bars and coins, which typically make up only a third of total annual demand. We've seen investment demand for silver rise and fall many times over the years. Industrial demand, however, has appeared far more consistent, and it's often cited as the main driver behind the silver deficits we've seen for the past 6 years. Let's talk about a couple areas driving silver consumption that are beginning to show signs of faltering. The first is the electric vehicle revolution. Not only does silver go into the batteries of electric vehicles, but all the charging infrastructure needed to keep people moving around the globe would use silver as well. All of that is in question. There is a tremendous amount of evidence that not only is the EV movement losing charge in the United States, but it's questionable whether it had the potential to ever take off to begin with. On its surface, it appears US auto manufacturers fully embraced electric vehicles. Big promises were made, targets set. But internal memos, investment gaps, executive roundtables, private analysis, missed or delayed targets, reduced capacity, and public walkbacks have all painted a very different picture. Over time, it's become clear that the electrification of transportation has been driven more by compliance than by genuine business strategy. The examples are telling. Ford, for instance, has repeatedly delayed and scaled back its electric vehicle programs, moving from a flood-the-zone approach to offering just a handful of EV models. Its next-generation pickup was pushed back to 2026, and recent reports suggest the company may scrap the F-150 Lightning altogether. The Oakville plant, once slated to be converted into a full EV production facility, is now being retooled to build gasoline-powered Super Duty trucks instead. Ford's public roadmap has shifted too, from aggressive electrification to a more cautious strategy built around hybrids. Ford is a great example, but it's not the only one. Mercedes-Benz once pledged to go fully electric by 2030, but now plans to keep internal combustion models in production well into the next decade. General Motors, meanwhile, canceled its low-cost EV program in 2023, a move that effectively ended its most realistic path to achieving mass-market volume in electric sales. There are dozens of stories like these. Think of them as representative, not exhaustive. The takeaway for silver stackers is simple. Sustained future demand for physical silver tied to the so-called electrification revolution is far from certain and, in many ways, far from reality. Some of our viewers might say that should have been obvious from the start, but for those who only read the headlines and not between them, the shift may come as a surprise. And speaking of shifts, advancements in solar technology may mean that less silver will be needed in the renewable energy projects of the future. Photovoltaics are one of the fastest growing sources of physical silver demand. Each panel uses a notable amount of metal, but almost all of it comes in a very specific form: silver paste. If you look closely at a solar cell, you'll see fine grid lines across its surface. Those are the conductive fingers and bus bars printed onto silicon wafers using a silver paste formula. They collect and transport the electrons generated by sunlight, turning that light into usable electricity. Most solar panel manufacturers don't make their own silver paste. It's a specialized product created by a handful of materials companies that supply the entire industry. Panel makers might collaborate with these suppliers to fine-tune formulas, but production itself is normally handled upstream. That creates a clear profit motive for those mid-market companies. The less silver they use, the lower their costs, and the more competitive their product becomes. Whenever we've mentioned this before, some viewers have pushed back, saying silver can't be replaced or substituted. It's not entirely true. New technologies are constantly being developed, and paste formulations are updated regularly. Some manufacturers now claim their latest formulas use ultra-fine silver powders that reduce the silver content per cell by as much as 30% while maintaining performance. This innovation is still new and not yet widespread, but as silver prices rise, market pressures tend to accelerate adoption. And this kind of optimization is a normal part of technological progress. Industry data shows that silver use per solar cell has been declining, not increasing. One report found that average silver content dropped from about 400 milligrams per cell in 2007 to just 160 milligrams by 2016. Another analysis shows that silver usage has fallen from around 60 milligrams per watt in 2010 to roughly 10 milligrams per watt today for some of the latest cell types. So you might be wondering, if efficiency gains have been this dramatic, why do we keep hearing that silver demand from solar is rising year after year? And the answer is twofold: government policy and overproduction. Back in 2010, global photovoltaic installations totaled around 17 gigawatts. By 2024, that number had surged to an estimated 400 gigawatts. Government incentives played a huge role in this expansion, driving down costs and accelerating adoption, often by artificially supporting the market. At the same time, China stepped in to meet this surge in demand. Through preferential access to land, financing, and rebates, Beijing turned China into the world's dominant solar manufacturer, now producing roughly 80% of all panels globally. The strategy is familiar: encourage overproduction, flood the market with panels priced below cost, and capture the supply chain, much like China did with steel and electric vehicle batteries. With the current administration's tougher stance on trade and foreign policy, the outlook for solar production is no longer something we can take for granted. The US has imposed steep tariffs on imported solar panels, some exceeding 3,500% in cases where illegal dumping was found. Those penalties are designed to protect domestic manufacturers, but they also drive up panel prices, which ultimately reduces end user demand. And lower demand means less production. If solar output begins to slow while high silver prices continue to encourage thrifting, the result could be a sharp decline in industrial silver consumption. Silver is, at its core, a commodity, its price ultimately governed by supply and demand. The bear case for silver looks beyond short-term headlines to examine the long-term cycles of demand, policy, and production. It anticipates a future where the need for silver moderates, bringing mining and recycling back into closer alignment with true, sustainable demand. Of course, investments in clean energy haven't stopped, and silver remains essential to countless modern technologies, from medical devices to electronics. We're not suggesting that demand will suddenly vanish, but it's worth asking: is a model built on endless growth truly sustainable? Let us know in the comments. Do you think silver's industrial demand will hold steady, grow, or decline in the years ahead? Or will the next leg of the rally be driven by silver's monetary appeal instead? That's all we have for you today. please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.